Good evening, everyone. Thank you for joining us on our live Q&A, where we're going to be addressing great information about the housing market and the mortgage market this evening. Thank you for joining our live tonight. Shortly, I'll be introducing Heather Aucello from Movement Mortgage. She's going to be joining us. She's my co-host for the evening. And later on, we're going to be answering your questions about anything that you have relative to the housing market or the mortgage market. So let's get started. I am Camille Smith. I'm a realtor here at Charlotte, in the Charlotte market. I work with Keller Williams. That's where I'm hanging my license right now. And I'm also licensed not only in North Carolina, but now in South Carolina. So just on a personal note, that's a little bit about me. I wanted to get into the concerns that people are, inquiring about as far as their knowledge of the market. If you're not into the real estate market on a personal or an investment level, you'll hear that there's still a whole lot going on in the market. And, it's with good reason. It's an exciting market right now. Homes are not lasting on the market. The average homes are on the market for 14 days now, as opposed to 16 days just last month. However, it's still a seller's market. When you have the request of so many home seekers and investors out here that are looking for homes, that's what's driving up the demand. And because there is a challenge somewhat of inventory, then that's going to result in higher prices. So right now, this is what's considered a seller's market. And the conditions favor the homeowner at this time. So you're going to see bidding wars, you're going to see homes again that aren't lasting on the market. You're going to see people that are offering $15,000 and up to $50,000 and even more on a home that's above asking, above what the seller was even asking. So this is what we're considering a seller's market at this time. But there is some relief though, because last month was the 5th month overall over the last 5 months that home prices were slightly dropping. But it doesn't quite make it a buyer's market just yet. But it does soften the process for buyers at this time. So that much is exciting, and it's just an exciting market. I love what I do, and I'm happy to help people. Our intent tonight is to provide information and equip anyone with questions. Primarily buyers this evening is who we're going to be addressing. Primarily buyers, to get you out there in the market and to just keep you encouraged. We hear a lot of buyers that are saying, oh, there are no homes available. Well, as long as there are people selling homes, there are homes available. And what you would need to do is equip yourself with a good relationship with an agent that has knowledge of the market and can prepare you to get out there and get that win. And coupled with that good agent, you're also going to need a good lender and or a loan officer. And this is where Heather comes in. I'd like to introduce you to Heather Aucello from Movement Mortgage. Hey,
Hi.
Heather.
Hello.
Welcome,
How is
welcome.
everybody? Thank you so much. I am so honored to be on this Q&A. I would love to myth bust about the mortgage process and just shed some light on what's going on in our industry. So, there's so much to talk about. I've been with Movement Mortgage since 2015, and I love helping people achieve their dream of home ownership. And there's a lot of things that are being said out there that it looks doom and gloom and everything, and I just want to share information I actually just want to share accurate information to let people know that now is a great time to buy. This is a perfect environment for people to gain the equity that they can on their new home. So this is a perfect time to buy. So thank you so much for allowing me to be with you today with this special event that you are hosting. So thank you again for having me on.
Thank you, Heather.
You're welcome.
I appreciate it. So speaking of the current market now, like I said, we are starting to see a slight decrease in prices. However, the interest rates are a factor as well. And, we were having a conversation today, and it's important to note that as a buyer, the importance is, while of course the price of the home is important, the interest rate, of course, is something that you want to pay attention to. However, when you work with your lender, the important factor is to find a mortgage that is comfortable for you. That's the most important part. Find a mortgage that you can afford monthly. Explain to your lender what exactly it is that you're trying to achieve or accomplish. So,
absolutely,
on a monthly basis, right?
Absolutely. And I talk to my clients, I try to be stress-free, because getting a mortgage, everybody thinks of it as being stressful. I'm looking at people's credit, I'm looking at your income, I'm getting into your personal business. And to be honest, I try to provide a laid-back environment where no questions are off limits. If somebody, has questions about their income, how they get paid, if they have tax liens or if they haven't filed their taxes, it's okay. That's what I'm here for, to be able to answer questions that clients may have, but in a comfortable environment. And I always say to everybody, what you qualify and what you're comfortable with are two totally different things. So it's really, really important that we're looking at the grand scheme of things, because we want to make sure that you living comfortable within your means, that you're still able to go out and, buy an outfit or two, or go out to dinner while still making this mortgage payment. So we want to make sure that it's comfortable and not just what you qualify for. So whenever I pre-qualify somebody, I do tell them, here's what you qualify for, but here's what you told me that you're comfortable with. So sometimes we have to balance that out a little bit.
Very good, very important. And these conversations with both your realtor, excuse me, with both your realtor and your lender should be frequent. They should be honest. They should be straightforward. That's the best way that you're going to have a short as possible and an almost instantaneous ability to get you out there looking into the market. Once you get all of those details ironed out, you know exactly what you're looking for, you know how much you can afford, and it just makes the decision making that much easier.
And I do want to mention that, whenever we're having these conversations, that, things may come up. Someone didn't know that I couldn't make a large deposit into a bank account, or that my uncle couldn't give me money, a large sum of money. All of those things need to be documented a certain way during the mortgage process. So what you get with me is I try to analyze everything. I tell you, if you're planning on getting a gift from your uncle, then let's structure it this way. Because, on certain types of loans, you may not be able to do a gift letter from a friend. Like FHA, you can get a gift from a lifelong friend, but you can't get a gift from a lifelong friend on a conventional loan. Only a family member, somebody like that. So these are things that, we need to have the conversation throughout the mortgage process. I try to do everything I can to set the proper expectations up front. And then all of a sudden, whenever we get the bank statement, there's a large deposit. Okay, well, where did this large deposit come from? Can we explain it? Things like that. Don't open up any new credit cards or get a new auto loan or open up any new installment loans or anything like that during the process. And people ask me, why can't I do that? You've already given me a pre-approval. Well, what happens is I've given you a pre-approval based on your debt to income ratio at that particular time. If you went and added more debt or you changed that, then that pre-approval is no longer valid.
All of those key details, it's almost like your relationship with your lender is much more important than your realtor. However, obviously they're both very important, and it's just very important, like I said, to be honest, straightforward, and make sure you cover all bases. Anything that you even think your realtor or your lender may want to know that they may not have asked, put it out there. And if it's information we need to know, we'll thank you and utilize it. If not, it'll be put aside and forgotten about. So
absolutely, we're a tag team here.
Absolutely, that's right. So Heather, I also want to touch bases on the sellers as well. It's still, as we said, leaning towards the seller's market. We do notice that homes are starting to stay on the market just a little bit longer. However, their time comes still pretty quickly. 2 weeks is still a pretty quick time to get your home under contract. What is it that buyers need to, consider in putting in an offer on a home that's been sitting a little bit longer? Do you have any experience with buyers that are coming back and saying, hey, I'm concerned about the interest rate, should I jump on this house while I research it? What are your thoughts on that?
So I have a lot of people that I do, and they say that they're going to wait for the market to crash. They're thinking when you hear recession, or you're thinking of 07, 08, where, oh my goodness, the housing market was such a different time then. So I just want to say that we are in a definite different market than we were in 07, 08. We had an influx of properties that were on the market then. And right now we do not have the inventory problem that we had back then. So that's one thing that is definitely going to be different. And here's something else that I want to also is that home prices are dictated by supply and demand, not interest rates. So whenever you are seeing these appreciation values, you're going to see that this is going to continue to happen. So what we like to say is, in the mortgage business and here at Movement, we have a little slogan, and it's marry the house, date the rate. And what that means is, yes, find that house, get it locked down, put a ring on it, and marry it, because that value of that house is not going to stay the same. It's going to continue to increase. It's not going to decrease. It's going to continue to appreciate in value. It just may not appreciate at the rapid rate that it has been the past 2 years. So marry the house, get the house that you want, and don't worry, because the mortgage that someone gets in right now is going to be a temporary one. So the interest rate, if you're okay with the monthly mortgage payment that comes along with that new home, then take it, because we're going to see that a recession is on the horizon, and we're going to be able to take advantage of being able to get into a refinance and refinancing into a lower interest rate. So you're going to be able to have the appreciation value on the home that you want, and then you're going to be able to capitalize with an actual refinance coming down probably in about 8 to 12 months.
That's awesome, Heather. It's really important for us to realize that real estate is one of the oldest forms of generating money. It's one of the best ways to have even better than a savings account. The accrued interest that the like you said, the equity that you're getting in your home grows far greater than the what, 1%, 0.1%, 0.5% that you would get in a bank, correct? So it's
Right.
really important for people to, sellers who were thinking about selling their current home and moving into their forever home, or moving away, or even using some of the equity in their home to buy a vacation home. Now is still the time. It's really important to make these moves for yourself. With the pandemic occurring, a lot of people, are just trying to figure out what's the best way to utilize their money. In some instances, I've seen people encouraged to use their 401k money to invest it in some real estate.
Right.
Mark Twain is quoted as saying, buy land, they're not making it anymore. It's really important for us to think about this for generational wealth and just consideration to have some savings. And if anything, you can sell your home and you have some cash on hand. God forbid anything get into dire straits.
Absolutely. Real estate is the wisest investment. Anytime. Real estate.
Yes, for sure. I'm a big believer in that. Another fear that has come up, Heather, is I don't have enough for the down payment. How do you address this these days?
So a lot of people think that they need 20% for down payment. And that is a huge myth, that a lot of people think that you need 20% for down payment. That is certainly not true. There are a lot of programs out there, the mortgage programs. So FHA is one of them. FHA requires 3.5% of the sales price as down payment. USDA, which is a rural housing loan, it's 100% financing. VA is for our veterans or spouses of veterans who may have passed away due to service-connected disabilities are able to use a VA home loan. That's 100% financing as well. Conventional, if you were a first-time home buyer, you can get a down payment as low as 3%. If you are not a first-time home buyer, there is a program of 5% of the sales price for down payment with a conventional loan. So, if those options are not available for you, you are not able to put the 3.5% down for FHA or the 3% down for conventional, we do partner with some really great programs that can allow for down payment assistance. Some of those programs would be North Carolina Housing, for one. You can go to their website. It's nchfa.org. It is an amazing company. I use them all the time for down payment assistance. You'd be able to get $8,000 in down payment assistance or 3% in down payment assistance. They also have a community partner loan pool program where you can get a substantial amount of money for down payment. You have to look at the pros and cons of every situation. So, if you use those particular programs, come with additional guidelines that you have to adhere to. You might have to have a higher credit score. You may have to have a lower debt-to-income ratio. Debt-to-income ratio is the amount of debt that you currently have, mortgage payment divided by your gross income, can't be over a certain amount. And may limit you to a lower sales price than what you would if you put money down. There's also another program with the City of Charlotte. It's called Dream Key Partners, formerly known as House Charlotte. Use those that assistance program all the time as well. Those ladies over there are amazing, doing down payment assistance with them. So there are programs available for anyone who may not have down payment readily available. You just have to make sure that you qualify for them. Your credit has to be a certain amount. Your debt to income ratio has to be a certain amount. Your income, it can't be over a certain amount. The sales price can't be over a certain amount. You have to fit into this little bucket that we have to form for you to be able to make sure that you qualify for those particular programs. A lot of people don't realize that they can use their 401k as money for down payment. That is a big thing right now. People, yes, our 401ks are getting hit and everything else, but using your money wisely for your investment is key. We're looking out to make sure that we take care of our investment, and using your own money can do that for you as well. well.
Absolutely, and just like you said, Heather, credit doesn't necessarily have to be a full stop in front of you. Again, have the conversations with a lender. Be straightforward. It may not be a no, but it just may be a not yet. And a lender such as Heather will get you in a good position to, see what it is that you need to work on. So definitely keep it heavy in mind. There are several options out there for you. And one other option I wanted to mention as well, there are still rent-to-own options out there. I have a couple of companies that I am affiliated with, and if that's something that you feel might be up your alley, where you can rent until you're ready to purchase that home, where you get to choose your home, they will purchase your home outright for you, and then you set up the payments for the following year or 2 years, and you can purchase that very same home that you're living in. So there are options out there. Working with your lender is very important. Trying to figure out what's going to go on in the market over the next year or two there is no crystal ball. The best option is to know what it is that you're comfortable with living with and work towards that goal. So we're getting ready to wrap up time, but we definitely wanted to allow some time for questions and answers. So if there's anything that you have, just go ahead and drop it in the chat. Right now, it doesn't look like there are any questions. So what we're going to do is we're going to continue to talk about, let's see, we can go on to...
Do you want to talk about the minimum credit score requirement?
Oh yes, absolutely.
So I know that is a hot topic for a lot of people. And, one of the things is Movement's minimum credit score requirement is a 580. But just because someone has a 580 credit score doesn't mean that we're going to grant an approval. So there has to be, some other things that have to go on. So meaning credit score is a 580. Let's look at your debt to income ratio. If your debt to income ratio is in line, that looks good. If you have assets, what's called as reserves. So how many reserves, how many future mortgage payments? So a reserve is a mortgage payment. How many future mortgage payments do you have in the bank after closing? We're going to look at that. We underwrite based off of an automated underwriting system, but then with our FHA loans, it's real important for us to look and, we'll also do what's called a manual underwrite. So it's not a computer generated approval. It's actually our underwriter looking at everything and saying, okay, this fits in this fits here. They haven't had any late payments in the last 12 months, then we are good to go.
That's awesome. That's awesome. There are several options out there. And that coupled with knowing that there are several options out there for home ownership, obviously you can go from a condo, you can go into a townhouse, single family, multifamily for investment property purposes, multifamily as being owner occupied, which is my favorite. That's where you can live in your multifamily home pretty much mortgage free and let your tenants pay your mortgage for you. Those options are still here in North Carolina. Again, I am licensed in North and South Carolina. You can definitely reach out to myself. I will be happy to put you in contact with Heather, and let's get this process going. There are several options out there for you. Do not be afraid to ask. There are several scenarios, and we can help. So if there are no questions, I think that we can go ahead and end this chat. Our following page will include our contact information. I'd like to thank David Fox from Joe Pledge Media LLC for being the behind the scenes media for us. We thank you all for joining. Thank you for taking your time out. Certainly reach out to us for any questions, and we wish you a very happy and safe 4th of July. Have a good evening. Thanks, Heather.